We got Money Guys, Dave Maney here. We've got Jared Levy here. Jared, the betting is that the Fed goes ahead and hikes rates. This concern about a global slowdown notwithstanding. Is there very little wiggle room for them here or what?
Yeah, so again, latest models and the Euro-dollar futures and Fed fund futures show about an 80% chance that they will raise rates next week. And by the way, Neil, this isn't about controlling oil prices, right? And granted, one of the mandates of the Fed is to control prices, stabilize prices. But what prices? And what is stable? OPEC, 13 countries can't control the price of oil. If they can't do it, 13 of them, I don't think the Fed's going to try and get their nose. I don't think that's a priority for them is to try and control oil. Low prices will cure low prices when it comes to oil. I think that they will hike next week. I'm at about 85%.
There are a lot of cynics out there, Dave, who argue, I think Carly Fiorina was among them at the end debate last month, that she thinks the Fed will grasp at any excuse not to raise rates. The latest might be, of course, the Paris attacks, the attacks here, and then, of course, this collapse in oil. Why add salt to that financial wound? That was the gist of the thinking about not raising rates. And all of this predated those comments on Fox Business, but that everything and anything comes up to get in the way of a hike. What do you think?
You could make a very good case on either side. I think this is a time of high uncertainty. I will say, however, that what we're seeing is continued distortions in credit markets from these interest rates. And I think anyone who's kind of a free markets person could look at it and say, it would be better if we didn't have this Fed activity or this Fed suppression of rates that, in my opinion, continues to force people on a quest for yield, which continues to inflate that credit bubble, which leads to a lot of circumstances that look to me like 2008 again. And while there is all of this
saying
threat,
that, in other words, if the Fed doesn't move, they'll be held to pay? It sounds like that.
I'm saying, look, I think there's as much risk or more from not raising as there is for raising, and that's my guess is why probably that's what's going to happen.
That's a very good point. And by the way, it was echoed in the last meeting, back in October, that got all the attention because there was a press conference attached to it, that people were surprised the Fed didn't hike down. I don't know why there was such shock about that, but the markets were punishing. If the Fed has drawn that line in the sand, Jared, they have to act on it. The fear is that they keep acting on it. It's not just a quarter point now, a series of rate hikes to follow. Do you buy that?
Well, okay, so you've got the past, which tells us that, typically when the Fed begins to raise, they do so in a sharp, nonlinear fashion, right? But Dave's right. I mean, we have a mental aspect to this, too. There isn't like a formula that says, okay, rates are X and we will have this amount of growth and the stock market will do this. No, at this point, the expectation is so high that the Fed doesn't do anything. Now the trigger becomes, wait, there's a serious problem.
Yeah, why didn't the Fed raise rates?
What
do they see that I don't, right? And that's the thing. That's always a fear. If the Fed doesn't act, even if it might be justified not to act because of some of these latest slowdown concerns, then people panic because they start thinking, uh-oh, they're nervous. I should be really nervous, right?
Yeah, and again, as we've talked many times, Neil, I mean, here in Denver out on Main Street, the best thing you could do if you want to get money moving in the economy is get the shackles off the bank's actual lending, because the guys here on Main Street still can't lend to medium and small businesses without all kinds of interference, regardless of what the Fed does.
All right, gentlemen.
A quarter point or half point doesn't make a difference there. Sorry.
Well, it's always the fear that they're going to be more. Rarely are we one and done, either up or down, right? We'll see what happens, gentlemen, but thank you very, very much.